Greetings, my awesome viewers. I present the June update with mixed feelings of joy and relief. Joy for being able to get my haircut done after a period of 4 months, and relief that we are finally done with the first half of 2020. So for my update today, I'll broke it up into 3 components. The first part, we'll talk about the asset returns for the first half of 2020. Second, I'll talk about the major risk factors as we head into the second part of 2020. And lastly, I'll reiterate my earlier message of relooking or revisiting your insurance portfolios to make sure that you're adequately covered. So let's start with looking at the asset returns for the first half of 2020. And looking at this graph in front of you, the way to read it is the yellow lines are the year-to-date returns. The blue lines are Q2 returns, the red lines are Q1 returns. And looking at across the asset classes, the picture that comes out very clear is that we have a winner, and the winner is gold. And it has played to its role of asset diversifier and a risk mitigator, especially in uncertain times. And given the outlook for interest rates as well as the uncertainty going forward, it's well positioned to maintain its pole position getting into the second half of 2020. Now, as I mentioned, the fall in interest rates has bode well for the bond returns. So that's also a positive territory. But the broad-based S&P 500 is also within striking distance of its pre-COVID peaks. Now, just looking at the S&P 500, you might be lulled into thinking that the worst might be behind us for the markets. But this is where I want to caution and say that there are risks out there that could potentially manifest themselves in the second half of 2020. And there are a slew of factors out there, but the ones which I want to mention are 2 key ones, which I think we'll need to keep an eye out for. The first one obviously is the outbreak of COVID-19. The response south of the border in US, it looks like it's been botched up, and it doesn't look like it's under any kind of a good control that the US has on this situation. So what this means is if there are potential shutdowns going again into the market, we are looking at further pressure on earnings, and that doesn't really bode well for market index returns. Secondly, there could be a second wave or an outbreak elsewhere around in the world where we already had an outbreak, and it could put a further pressure on the world GDP growth, which for the first time since the record started way back in 1980s is showing a significant downturn in the worldwide economic output. Now, the second risk factor I think out there is a potential Democratic win for the White House as well as for the Senate. And because what that could mean is that could be a potential rollback or a partial or a complete rollback of the tax reform, accompanied by more regulation for the companies, which puts further pressure, downward pressure on the earnings. So I think those are the 2 main factors. There are others out there. There is geopolitical tension between US and China. There is this perceived ability of the Fed to backstop the market, especially the bond market, and there's 2 of other factors. But so all I want to say is that the rest of 2020 could be as bumpy as we had in the first 2020. So we just need to brace ourselves up for a bumpy ride. Lastly, I want to say that COVID-19 has brought a great sense of mortality among us, or the awareness is back out there. So I request you that if you haven't looked at your insurance portfolios, to dust up your policies and see what you have in place. And what you're trying to determine is 2 things. 1, you're trying to determine if you're undercovered, and 2, if you're paying too much for your existing policies. And either case, whatever be the scenario, if you just need to figure that out for yourself, or you need to reach out, you know the number to call, 905-363-5035. I'll just conclude by saying that we've had a very bumpy first half of 2020, which more or less likely, if I were to hazard a guess, will continue into second half. But it's also been an opportunity to reflect and think about the things that were important in our priority list as professionals, as personal lives, but just got pushed down because they were not urgent. So now's the time to act on them. Stay safe, practice social distancing, and have a great summer. Bye for now. Thanks for watching.